Welcome to The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm Vice President of Guildhall Wealth. Joining me today is Jerry Correa. He is a Senior Associate. This week, I'm calling you VP of Sales, buddy.
Thank you very much, Jeremy. Great to be on the show.
We have what in front of me right now, I'm seeing just a lambast of paper that you've brought to the show. But essentially, I want to start right here. I'm pointing to this particular one. Let's hit that off first, because I think that's going to set the stage for what we talk about for the rest of the 40 minutes we have.
Yeah, because it had to do with the U.S. CPI year-over-year data. And CPI, what is that?
What is CPI?
It's inflation. Doesn't include, so their basket of inflation, how the CPI is read, they don't include things like food, fuel. We don't want to know what these prices are doing. Real estate, we don't really care that real estate is going up in price. But what is inflation doing? So
we're just jumping right into consumer price index. Yeah. The idea that when the price of chicken gets too expensive, we'll take that out and put in ground chicken because that's a bit cheaper or whatever. And so it helps mask what the real inflation rate is. But we all know inflation's going through the roof. So what is this actually telling us?
So last night, yesterday, in fact, inflation figures out of the States came in hotter than expected at 5% against the 4.5 expected. Basically, the highest headline inflation print since August 2008, just before Lehman collapsed.
Wait, did you just call them Lehman or Lehman?
Lehman.
Let's call them Lehman.
Exactly. Lehman Brothers, the Lehman Brothers. Again, but more critically, the core CPI surged 3.8, the highest print in nearly 3 decades. And so we had immediately we had a tweet from Octavio Costa from Crescat Capital. He tweeted, last night, real yields reached such low levels was in the 70s, and policymakers called for a war on inflation. Today, they are welcoming it. In fact, the transitory propaganda has never been louder. This is perhaps the most bullish macro setup for precious metals in over 50 years.
Because it's all transitory, or because they don't believe it's transitory at the end of the day?
They don't believe it.
Yeah.
And they're spinning it, and they're introducing other things such as tapering, that we're actually seeing some growth in the economy. They're welcoming these things, but it's one or the other.
Yeah. Let's get it into right perspective here, okay? We are not heading back to normal. That's not going to happen. In 2008, they dropped interest rates to zero. They copied what Greenspan had done at post.com bubble, dropped it to zero, and then he started to raise rates and the economy could handle it. But by the time 2008 came around, they could no longer raise rates without dropping the market. Of course, they did not want to deal with the recession and the fallout of that, so they decided, let's just keep lying, let's just keep the money printing going, let's keep interest rates as low as possible, and we'll jawbone this thing to death and hope that we can figure it out. At that point, the system was already dead. Now, COVID comes along, and they can literally print as much money as humanly possible. Well, I think it's beyond human possibility. It's now in the realm of, let's just, in our minds, create it all. Let's do it. We can blame everything on this event, but the system's over. It's dead.
Yeah.
A normal, logical, rational human being now has to sit back and say, can the Fed ever pay off $8 trillion off of its balance sheet? Where are they going to get that money? Where? You can't just print it and pay it off. You're the Fed.
That's right.
Right? So you're not getting that money. You're never going to pay it off. You might pay it down a little bit, and before you know it, you're going to be right back at it printing more and more money. Meanwhile, Wall Street is completely dependent on the punch bowl. Everybody knows it. They're never going to raise rates again unless they're completely forced to raise it, in which case the game is already over. They don't care what happens after that. It's like the earthquake has already happened. The panic has already set in. The game is over, so you might as well start raising interest rates. Look, the game is already over. They're never going to put rates back to normal unless they're forced to do it by the actual natural forces of the market. And they're only going to keep printing more money. How in the world are you going to get out of this? The only way that they're going to get out of this, and you're starting to see the glimpses of this, is to destroy the current system and move to a new system. And that's what they're doing. And you hear the glimpses of it. They're talking about the Fed coin or whatever it is. And they haven't quite figured out how they're going to get there yet, but they're certainly on their way to it. And you need something to protect yourself against all of this. You need the bridge. When a currency collapses, you need a place to put those funds, the value, all of that money that you've earned in your life over time.
Yep.
And what are you going to do? You have to protect yourself, and that's where gold comes in.
You got to take action, and you have to do this earlier than later. We're seeing this sort of a shift in monetary policy, shift in the type of currencies that we have in circulation, systems that have come into place. We're talking, you mentioned different various cryptocurrencies, and we're talking Fed coins. There is a shift away from the old into some sort of a new. Basel III, this is a very huge headline for precious metals. Why? Because yes, it is talking about gold and disvaluing the unallocated positions that were allowed to be on the bank's balance sheets. Now they're not allowed. They're going to be worthless. And now they have to shift for the physical. But what's more important, that they're rushing this through. Basel III didn't have to happen on June the 28th. They moved it up from January to June. So the importance of gold is indicative of how soon they had to act. And going back to this inflation and the Fed and the money printing, the pedal to the metals, and the talk about the printers going brrr, just racking up the cash. It's not just in the States. Canada just was boasting that, we're going to taper as well. We're going to go down to $3 billion a week here in Canada. But the problem is we don't have a population the size of the United States. Here in Canada, we have 34 million people in Canada. While businesses are shutting down, you got people worried, and people don't even want to go back to work. They're loving the checks. Well, guess what? Those checks and the value behind that loonie that you're receiving is going down and down and down. So as it's not just in the U.S., it's happening in Europe, it's happening in Canada, and and ask yourself, what happens if interest rates go up, or the bubble is artificially inflated even further? Gold ultimately has your back in either scenario.
The number 1-877-8-SILVER, the website guildhallwealth.com. Yeah, the idea of universal basic income, destroying middle-class businesses, that's all just to get you hooked into the government. And at that point, you're there. You're already trapped. You're done. You're part of their system. They don't want people who make their own money, right? Certainly not people who protect their own money. I just think at this point, we know that gold has been a hedge against inflation. The history is there. You know that it is a place to store wealth. You know that gold is absolutely cheap where it is. I know some people think it's expensive. Oh, it's trading around 1900, US if you're buying it. It's probably like over $2,400 to buy an ounce of gold in Canadian dollars. Look at the debts, almost 300, if not past 300 trillion in debt in the world. 300 trillion. That's not including unfunded liability. How are you going to pay it off? Most countries are past the point of debt to GDP, 100% debt to GDP. Mm-hmm. It's mathematically impossible now to ever pay it back. You're screwed. It's done. It's over. If you're not getting into the market to buy physical gold and physical silver now, you're going to be left behind. You have to start thinking about it. You have to take the action today. I just don't know why people aren't more panicked in the physical gold and silver market. We've had a couple moments over the last year where we've seen it, but I think, I don't know, is it just summer? People are being lackadaisical. I really feel like our shelves should be completely empty.
Yeah.
Completely empty. There's no excuse. It is better to be a month early than a day late. You do not want to be the person trying to contact us when the price of silver's finally broken $30 an ounce and is headed very quickly to $40 an ounce. Who knows how it's going to play out? And now you've decided, now I see the momentum. Maybe it's time to get into the market. Wrong reason. Wrong reason. Not buying on momentum. You should be buying it because it's protecting your wealth. Mm-hmm. And it's done so. Both gold and silver are up at least 11% a year over the last 20 years. Sure, yes, you can make more money in other places. It's not the point. That's not what an insurance policy is all about.
Correct.
If you have a portion of gold and silver in your portfolio, 10, 15, 20%, what's Russia's central bank up to? They want to get up to really high level. Then you've got the insurance policy? Great. Go out and invest and make more money. all the power to you. We're not here saying don't invest elsewhere, but this is what you need. And when it happens, look at what happened in 1980, and what we're seeing right now around us is an echoing of the 70s and stagflation. And believe you me, the next thing that you're going to see is going to be price controls.
Yep.
Right? That's coming next. So you're going to see the price take off. In 1980, price of gold goes up to $850 an ounce. I think it started around $200 an ounce. Silver goes from $5 to $50. These moves can happen. We saw it last year. Silver goes from 18 to 31. Gold goes from what, $1,400 to $2,100 an ounce. Huge moves. It's going to happen again. This is the time to be getting in. You don't want to sit there while it's moving and trying to get into the market. You want to do it when the waters are calm.
Mm-hmm. And exactly, Jeremy. And, you know, we should be paying attention. Canadians and even Ontario, we're here in Ontario recording. Ontarians are really focused on, you know, this weekend. We're opening up the patios, and we're looking at, you know, as far as our liberty goes and freedoms go, yeah, we're getting the patio back. But is really that the most important thing that we should be focused on right now? I mean, there's a great quote regarding liberty. Like liberty, gold never stays where it is undervalued. You know, people are seeing through these narratives that we're seeing that, you know, we are free. We just comply. But no, so I have a lot of clients, and you have a lot of clients that have left this country for a reason, and they've taken their gold with them. Some people have kept their gold here, but there's a point here is that gold will ultimately be the staple of the financial system and the staple of liberty.
It is completely decentralized, right? It's a decentralized thing. It's private.
Right.
When you own it, no one else owns it. You can't just destroy it once someone else owns it. If you own an ounce, that's it, right? No one else has claim on that except you. That's called zero counterparty risk. Can't do that with stocks. Can't, you know, even real estate, you got a mortgage. Someone's got a claim on that, right? Let's talk about more. The number 18778 silver, the website guildhallwealth.com. More reasons to get into the gold and silver market in the next segment on The Real Money Show, and you're listening to Global News Radio 640 Toronto. Welcome back to The Real Money Show, the number 18778 silver, and the website guildhallwealth.com. If you want to get involved in the physical precious metal market, all you have to do is go to the website, guildhallwealth.com. We deal with physical precious metals. Everything we have at Guildhall is physical, globally recognized brands, very liquid, very, very liquid. If you think about Royal Canadian Mint product, just as an example, that's a product you could take anywhere in the world. They're going to easily accept that to sell, no problems. And that's the great thing about gold. You know, one thing about gold and silver, though, Jerry, that I think people are learning is that it's somewhere between a hard asset, or non-liquid asset in a way, like real estate. But once you overcome the cost of doing business, it's as liquid as a stock. Right? People love the idea of liquidity with stocks because they can say, oh, if I buy it today and I have to sell it tomorrow, I get my money back. Not if the price went down 20%, right? How long are you going to hold on to something like that in a portfolio? But yes, it's liquid. Well, so is gold. So is silver. Incredibly, incredibly liquid. Now, the difference is you have to bring it somewhere unless it's being physically stored for you. But the liquidity is there. That's the idea. I mean, it's universal money.
That's right. That's the beauty of why and the reasons why central banks around the world, minus Canada, require physical gold on their balance sheets. It's a unique combination between liquidity, global liquidity, trading around the clock with transparent prices around the clock, as well as independence, zero counterparty risk. You're not tied to a nation's currency. You're not tied to the financial system, banking system collapse, market holidays. It's also not tied to the performance of a company. So gold is in itself the system itself. So this is why we should own it as well.
And it has an innate value, and that's the key, is that it has value in and of itself, both gold and silver, and then also as money, as a currency as well. I was doing a little bit of research this past week, Jerry, on the quantum financial system and looking into Nasera, Jacera, and I was trying to figure out what the potential of gold and silver have in a system like that. Because I did read one place where they were saying, if the demand would be that every currency would be gold backed in some way. And it doesn't matter if they use crypto or whatever. If a country has a currency and it happens to be a digital currency instead of a paper currency, or the form of digital that they have now, it would still be demanded that it be backed by gold. And in the end, it wouldn't matter what the price of gold is. I'm not quite sure if that's true. I mean, I guess if it's a crypto, like a sovereign cryptocurrency, and I'm not talking about the kind that demands you buy it, like a Fed coin, where that's basically they're trying to enslave you. Let's be honest. Do any research on these central bank cryptocurrencies, and you quickly realize, oh, do I really want to be part of like what they have in China, where
if you're not
if they don't like me, I get cut off, or they just raise my taxes if they don't like what I've said on Twitter or something. This is absolutely what you don't want. But they're leading there because it's the central bank system's done.
Yeah.
They've printed their way into oblivion. Now we've got to they have to find a new system.
Yeah.
So getting back to this quantum financial system, definitely gold is going to be a part of it. That for sure. So again, we come back to gold as the bridge, silver as the bridge. Yes, there's lots of new technologies. They're going to be exciting. Cryptos are exciting. But what is going to back those things that are going to make them have the value that you need to even the playing field?
Yeah.
To say, I'm going to make a trade with someone around the globe, and we're going to trade currencies, and we're going to do a business deal. But I know they're not manipulating their currency behind closed doors because it's all based on gold. And it's instant. So I love this idea, and I truly believe that ultimately gold will be the bridge to these things.
Yeah, we see the writing is on the wall that with regards to the insustainability of the entire global market, debt upon debt upon debt. 2008 was a debt crisis. They launched QE. That was a debt
experiment
solution to the debt problem. You can't have that happening. So there needed to be this this reset talk. And either way, if we go towards a fiat reset or a backed reset, either way, there's a reset here happening. But we see the interesting thing is that the BIS and the Bank of International Settlements is calling on the physical gold. So, we have to do the same thing. We don't know exactly what steps will play out, what the catalyst will be, but we see the writings on the wall. We see the trend, and we're going to follow those trends very keenly. And why, at the same time, do your research, discuss this with professionals like Jeremy and myself about, what other individuals are doing. And individuals are buying physical gold and silver. They are dabbling in some crypto. They're definitely not jumping back into the property markets right now. And they're hedging themselves.
Yeah, and I feel like maybe you were essentially saying become your own central bank, perhaps. Was that something I was getting a sense of from you right there?
That's the central bank is. I don't like it because it is a tenet of the Karl Marx's Communist Manifesto, and so the central bank idea is unfortunate. We have central banks all over the world. Russia has definitely moved away from that. They've nationalized the central bank, so it's a great move. Whether you like them or not, but it's a great move to create some independence.
Well, you certainly didn't have income tax until you had the Fed, and they passed that through on Christmas Eve when no one was watching.
That's a fact.
Trying to make it palpable to people, so they called it the Federal Reserve, knowing that it was a completely private, colluding banking system. So I really think people should start with that. People should learn about what the Fed is all about. The great book out there came from Jekyll Island, A Second Look at the Federal Reserve, and I think you can learn a lot reading that book. To me, it's a fantastic book. He does a great summary at the end of each chapter, and it really teaches you how to just follow the money, and then you understand the motives. You understand the motives of the central banks by the way they're operating right now, and they're, I dare say, panic to get to the next system. There seems to be a race on, and ultimately that's why there is uncertainty right now. It is uncertainty beyond uncertainty of where things are. And I think if you're lulled to sleep that you think the stock market can double from here, if you think cryptos can triple from here, I think you're in la la land. I think you need to have insurance. And again, you want to drive like a maniac on the road? have insurance.
That's
then
right.
then go for it. Just don't kill anyone along the way, right? Don't hurt anybody else.
Yeah.
So I think that ultimately people really need to be considering precious metals here. They have thankfully not taken off yet. That is really the takeaway for today. You have still the window of opportunity to get into the market, and they've performed wonderfully over the last year and a half. But the window is there. They're cheap. Gold is cheap relative to the currencies, relative to the debt. Look at the gold house ratio. You should not have to spend 700 plus ounces of gold to buy an average home in Toronto. That's craziness. When I started, you shouldn't have even had to buy a home in Toronto for 5,000 ounces of silver. That's where I started. We're up to, we were around 15,000. Now it's up to 25,000 ounces to buy a house. That's craziness. As you know, you've taught me it should be something like 2,000 an ounce.
That's right.
Or 2,000 ounces to buy a house. So these assets are undervalued. Value investors know, go for something that's undervalued, sit, wait, let these markets explode, and then you can look at editing the portfolio and bringing it back down to 15% down the road. There is a lot of money to be had, but this is also the place to protect.
Exactly. Protect from the extremes, the extreme uncertainty, the extreme overvaluation in the stock markets, the extreme bubble mania that we're seeing in almost every single asset class. Look at the prices that are taking off. These extremes can only get worse, and gold and silver perform during extreme times. They will perform for you. They will be there for as insurance, but they'll always make capital for you. It'll grow your wealth. 2,000 ounces in 1980 buys a house. This is going to happen again today. And this is an idea that many individuals are employing today, that they are looking at hard assets. It could be, more property, but they're not jumping into property. So what are people doing? They're actually taking excess equity out of their houses, hedging their mortgage exposure with 2,000 ounces of silver. Why? Because when 2,000 ounces of silver becomes $800 an ounce, you can now buy an average house in Toronto at $1.6 million. This is a huge opportunity to not only pay off your mortgage and be debt free, because we know debt is slavery. We want to get out of debt. We want, to safeguard wealth for future generations. And what a great avenue to take on silver. 2,000 ounces today is how much? Just over 80,000 Canadian. So let's think about that for a bit, and the huge opportunity that we have here in silver.
Yeah, look, and I think even from a mortgage perspective and mortgage insurance perspective, if you have gold, you don't really need mortgage insurance. If you have enough gold that you can say, look, if I have to be in a position where I have to pay off the mortgage, gold should have moved up significantly from there. And if you've been building a portfolio over the years and you've seen the value continue to increase, that becomes an insurance policy that goes beyond just insuring your wealth. It can insure other things as well. Also, you can pass it down through generation to generation very easily. It's just such a dynamic way to store wealth and pass wealth along. And, I just think right now is such a great time. And there's no excuses. The money's there. The money's there. Maybe you have a Lira account that you've been ignoring that maybe has been in mutual funds getting 3% a year or 2% a year, and the advisor's getting 2%. And you're saying, well, how come the stock market's going crazy and I'm not making any money? Or maybe it's I've gotten out of real estate and I don't want to jump into this real estate market because, my real estate agent and my real estate lawyer and people I talk to, they're all saying this is absolutely crazy. Let the other people fear of missing out. Let them go off into this market. There will be opportunities. Mm-hmm. And as someone who's held gold for over a decade, I can tell you, once you own gold, you have that safety net. It's a whole different world. And I think maybe we should talk about that next, Jerry, this idea of putting a little skin in the game. The number 18778 silver, the website guildhallwealth.com. Learn how to get physical precious metal in your portfolio. You can do that in a registered account like a LIF, a RIF, a Lira, an RSP, a TFSA, a spousal RSP, even an RESP. And let me tell you, I have an RESP. And just over the last couple of years, up 40% plus. That's pretty good RESP performance, really for good. A little kid.
Mm-hmm. Love the idea of, even getting some RIF accounts through getting some precious metals into the RIF. You no longer have to take the value of the metals from a RIF. You can actually take the metals out of the RIF. So if you have any RIFs or lifts, talk to Guildhall. We can help you roll over the LIF accounts or any registered plan. Just give us a call at 1-8778-SILVER, guildhallwealth.com.
So you're saying, yeah, when someone they have to pull their money out of the RIF or LIF every year, instead of taking out, $10,000, they could take out like 4 ounces of gold.
Exactly. And we have individuals that do that because they've been quite, great stewards over the years and have other means of income. So they don't want to necessarily have to, sell the RIF and take more income. They would rather have the metal so that they can pass it on to their kids and their kids' kids.
Yeah, I think this is a great opportunity to just learn about this market, put a little skin in the game, go out and acquire a little bit of product, whether it's even just 1 ounce of gold, just to see what that process is like if it's new to you. Hey, let me try this. Let me just see what this process is like. And then you can get a feel for it, build up a relationship, and then maybe it becomes a habit. Maybe you decide, yes, I do want to get involved more. Yes, I do want to put it into a registered account like a TFSA. And there's other ways to get involved. The time is now. These markets are not going to stay down forever. The premiums are really high. That tells you that demand is strong. Inventories are low. The only way that reconciles is with much, much higher prices. We are in this phase right now where the market's a bit quiet, but it could change on a dime. We're at that $28 level in silver. We're trading up on the $1,900 level on gold. The resistance level is right there. You peek through it, you break through it, and this market could be off to the races. The number 1-8778-SILVER, the website guildhallwealth.com. You're listening to The Real Money Show on Global News Radio, 640 Toronto, and we'll be right back. Welcome back to The Real Money Show. The number 1-8778-SILVER and the website guildhallwealth.com. Fear, loathing, and forecasts. Jerry, let's start with, I'll take fear for 200.
Well, just before the COVID crisis, the U.S. central bank was going through a manic period, a very panic. It was called the overnight repo market. We have all heard about that. We're all seeing it now. For the last 2 months, the U.S. is going through this issue again. And basically, the Fed is walking a thin tightrope between fighting off financial asset deflation, a stock and bond market crash. But to do this, it needs to print. But it also has to avoid money printing, translating into that word of hyperinflation, the Weimar-style hyperinflation, and crash the dollar. Along with that, the Fed has to prevent the Fed funds rate from going negative. So this is why they've had to implement this reverse repo, where they have to mop up excess cash. So they're doing this overnight. So normally what the Fed will do is lend to banks. That's called a repo action. And then the banks will then lend to corporations. But they're not doing that anymore because corporations are going out of business. They don't want to expand. They can't expand. They can't take that excess cash. So excess cash goes up. Fed has to take back that money. And this is what's going on. So just last in March, they had to take back $26.5 billion. In April, $100 billion. Now we're up to over $250 billion.
That what liquidity. The Fed is taking back, or they're just holding on their books?
They're basically sloshing between the Federal Reserve and the banks, and they're going back and forth, sloshing, and all this.
So the plates are spinning in the air.
Yes.
I want to do, you know how they use CGI and all these things? I want someone to put a CGI together of Lucille Ball with the chocolate factory. Mm-hmm. Everyone knows that, right?
Yeah.
But I want it to be Powell. And instead of maybe chocolate balls, it's issues, problems like repo market and interest rates and printing money and all of those things. And because it's starting to come fast.
Yeah. The
problems are happening faster and faster. And that's why you see these central banks, they can't wait to try to get to a new system and try to put out Fed coin and stuff like this. So I just feel like we need to do something to protect against this, because when this happens and goes down, we have to get out of the way. And one of the best ways to get out of the way is to have a hard asset. That can be gold, that could be silver, that could be a natural fancy colored diamond. Natural fancy colored diamonds have started to do quite well at auction. And while they are dependent on the jewelry industry, and that's still just starting to get open again, this could be a very, very good time to get involved in those markets before they really start to take off, because they performed incredibly well during that inflationary period between 2005 and 2015-16.
Yeah, that's because these assets are not only like diamonds, natural fancy color diamonds have an intrinsic value. They're beautiful, just as gold. They're beautiful, but they have a value in that they are negatively correlated to this inflation. So, or negatively correlated to the U.S. dollar. And when you have expanding U.S. dollar, there is inflation. And these assets, such as natural fancy color diamonds, pink diamonds, going up over 300% over the past 15 years. This is the type of performance that you're to get in a diamond. It's very calm, very cool. Precious metals, you have that balance as well. You want to grow a hard asset portfolio, whether it be a natural fancy color diamond, some precious metals, some land. Everything has to be moving in tandem up.
The number 18778 Silver, the website guildhallwealth.com. We forgot the loathing. Let's talk about the loathing.
Loathing, Jeremy. We have the Federal Reserve using talk. They're talking about this. They're saying that. They want to taper, and they want to that there's no inflation. Even though we see inflation, this is what I loathe. We see the prices going up like crazy around the world. It's not just in the U.S., it's not just in Canada, but it's not there. It's transitory. It's because the U.S., they're using their checks to buy vehicles in the United States, used in new vehicles. That is the reason why prices are transitory in the United States. But the fact of the matter is, real ticket items have gone up tremendously. Things that we rely on, like food, we rely on. I loathe that, Jeremy. This is just insane.
Yeah, you're triggering me with like cat on the hot tin roof.
Yep.
Right? Mendacity. It's
right.
Mendacity. You're loathing the mendacity of it all, and it's starting to get on our nerves. Just constantly being lied to, and if those who try to speak the truth just get censored constantly. And so that is part of the uncertainty times that we're living in, where when does truth become something that's transient? Mm-hmm. You know, that's the problem. And really, when it comes down to it, that's one of the reasons why I love gold and silver so much, is because they are truth. They will tell you. When the tide goes out, you find out who's naked, and you're going to find out where the money is and what's really held value, and that's where gold and silver are going to save you. And that's where they're going to save the portfolio, and that's where they're also going to take off. So let's talk about projections.
Well, this is why I wanted to bring up the In Gold We Trust annual. They had their annual gold review, and I brought this because it's important. The last time they had a report in 2019, they signaled a new high in 2000 for gold, which hit in $2,075 in August. So they were spot on in their report, and I recommend reading this report. It's actually 300 some odd pages, launched by Incrementum, and this time their focus is on the monetary climate change.
Well, let's get into it in the next segment. We'll talk about the forecast in just a moment. And of course, for those that don't have the time to read the 300 pages, of course, you have read the 300 pages. Is that correct, Jerry?
No, the Coles Notes version.
The Coles Notes. Okay. All right. The number 18778 Silver, the website guildhallwealth.com. It's about getting physical precious metals in your portfolio before the market really takes off. You want to protect yourself in uncertain times. You're listening to The Real Money Show on Global News Radio 640 Toronto. We'll be right back. Welcome back to The Real Money Show. The number 18778 Silver, the website guildhallwealth.com. If you're just joining us, we were just discussing the Fed's fear of the repo market, the fear that it will all come crashing down on them. The loathing. What did we loathe? We loathed the mendacity of it all. Just the untruthfulness of government, the untruthfulness of these central bankers. You've got to be more critical in your thinking with these things, and you have to start really understanding what money truly is. Otherwise, you're going to be lost. These are uncertain times, and this is not the time to just be fluttering off into the wind and just believing everything you see or read. You've got to do your own research. And as we believe on this show, just like Gregory Mannarino, become your own central bank. Gold has zero counterparty risk, and that is the whole purpose, to get out of harm's way, to get out of the Mack truck that's coming in terms of the fall that's going to occur in this market. You can't just print money forever without any consequence. These are going to have major consequences, and one of the consequences that we're seeing is, of course, inflation, and it's rearing its ugly head in a huge way, and we know that gold and silver are going to protect against that. They always have. Look at what they did in the 70s. Gold and silver went ballistic. We believe it's going to happen again. Right now, I think the waters are calm. It's a perfect time to get into the water and get some physical gold and silver in your portfolio. Let's talk about where these markets could possibly go. The forecast, Jerry. The forecasts.
I had to bring this report. It's the In Gold We Trust annual report. This time they titled it "The Monetary Climate Change." Why I brought it, I thought it was very key.
Oh, that's a good title. I like that.
Well, we're seeing a
way to put the climate change thing in there. Yeah,
good hook.
Not climate warming.
No,
they've changed it to climate change.
Climate change.
Right.
That's
right.
right.
That could take on all sorts of meanings. Like we can peg all sorts of things on change.
Exactly.
Everything changes.
But we're seeing a monetary change, and they hit the nail on the head. So there, why I chose the Incrementum report. Well, back in 2019. They had a forecast of gold hitting all-time highs. It came to pass last year when we hit $2,075. And what are they saying this time around? Their forecast is pretty simple. They're focused right on inflation, and as a result, there are a lot of changes happening in the market. So they mentioned that if things stay conservative, that we don't see a hyperinflationary event or an inflationary event. They have a price set target of $4,800. Now, this is this decade, the 2020s, they call it the golden decade. So they have a price set target of gold of $4,800 US for the end of the decade. If the decade was plagued by stronger inflation, though, the price of $8,900 could be expected at the end of the decade. With the monetary climate change that we are witnessing this year, the risk of inflation is growing visibly. So what do we take with this? We look at these reports. They were right the first time. They're going to be right the second time because they have 300 pages of analysis here, not flip-flopping from the Federal Reserve, not knowing what they're going to do next. We have some serious data here regarding the U.S., the debt to GDP ratio, the changes, the shifting from the share markets, the ETF markets, over to physical. Basel III is mentioned. And, just to conclude with a quote from our favorite guy at CNBC, Rick Santelli.
Yeah, I like him.
He's awesome. He says, if you trade in paper, the notion of many who trade gold, if the financial world comes to an end, they're going to have gold. If you're playing in ETFs, you're going to have a piece of paper. Rick Santelli, ladies and gentlemen, this is honest to goodness truth. You're going to be holding paper in the next inflationary event.
He probably got slapped so silly in the staff meeting after that episode. The fact is that if you hold physical precious metals, whether you take it home, whether you store it in an independent vault facility, private vault, Jerry, it's all about privacy, or you're holding it in a registered account, also in a private vault, the fact is your wealth is secured. It's secured. If you have paper, that is denominated in dollars. It's denominated in dollars that they are printing a ton of. So you're holding something, and in the background, they're printing all this money, and they're just devaluing what you're having. And you're saying, oh, but it's going up in value. Is it outpacing the money that they're printing? You can't earn money faster than they can print it. You can't earn enough in different investments faster than they can print it. Mm-hmm. You have to be really good at your investing, and that's why it's just so easy to get physical precious metals in a portfolio and call it a day. You can invest in other things because you have the safety net, because you have the insurance policy, and that's what we're talking about here. We know that gold and silver are not the end-all be-all. They're not the panacea. It is about having a portion of your wealth in physical precious metals, in hard assets, and the rest is about, get rid of the debts. Right? Be smart about your investing. Do you think the stock market's going to double from here? I mean, you'd be looking at a hyperinflationary event if that was the case. And even if we're wrong, even if everything hyperinflates and then you have this massive deflation, now you're going to have a question of, well, what's going down slower than the other things, right? And so again, I think that's where gold is going to be king in that sense. Look, every currency around the globe has been devaluing their dollar for decades. Now it's happening in rapid time, and it is only a matter of time before gold and silver really, really take off. The premiums are there. You know that the market has to go higher. You know that there's a floor in the market. So it's time to get involved right now. If you have never invested in precious metals, this is the time to do it. The number 1-877-8-SILVER, the website, guildhallwealth.com.
Now, this key takeaway for those who are now tuning in who haven't purchased gold before, the main takeaway is inflation. This is a major headline. This is a number one Google searched item on the internet. And basically, we have to know that this has happened in history. History can and usually does repeat or at least rhyme. The setup is here to see inflation or potential hyperinflation. We cannot dismiss the fact that this happened throughout history with Hungary in the 40s, Zimbabwe up to 2008. We have clients. Thailand, you name it, Venezuela,
Argentina,
Yugoslavia. And what happens is when in hyperinflation is extreme or excessive inflation where price increases are rapid and out of control. What happened in Hungary? The time required for prices to double was 15 hours. It took 15 hours for prices to double. Imagine that. Just imagine, let that set in. In Zimbabwe, it took 24 hours. In Venezuela, it took 18 hours.
And if you lived in any of those countries and owned gold, guess what? You don't live there anymore. You got out. You were leaving, right? That's the whole purpose, that's the purpose of insurance. The number, 1-877-8-SILVER. The website, guildhallwealth.com. Unfortunately, we've run out of time today for the Real Money Show. We hope that you've gotten some good takeaways. Feel free to contact us. We're happy to chat about these markets and talk about these markets and the reasons to be involved in the gold and silver market and, of course, the natural fancy color diamond market. Thank you again so much for listening to us this week, and we look forward to speaking with you next week on the Real Money Show on Global News Radio, 640 Toronto.